Okay, good morning, good afternoon, good evening, everyone, and welcome to our sessions on the new digitalizations of international finance and the future of international monetary system. That will be the sessions before we will go after to the session on fiscal policy. It's a great pleasure to welcome our chair, Ousmene Mandeng, Senior Advisor at Accenture, will be chairing these sessions. This is a topic that we have been addressing over the last few weeks in different webinars that we have been organizing during the IMF and World Bank meeting 2 weeks ago. And we hope that we will continue to do so, as this is an important topic. We saw some recent reports, recent papers from the ECB, from the BIS, also some statement by Governor Bank of Japan, who will do some experimentation about CBDC. Clearly, this is maybe a new phase of the way the international monetary system will operate. And I hope that also the G20 under Italy presidency will also follow this topic. So I'm pleased and I welcome to all of our speakers, our friends. Thanks for joining. And Ousmene, please, I give you the floor for 1 hour. Thank you.
Excellent. Thank you very much, Mark. And many thanks for the invitation to chair this panel. I have been working with Accenture now for about 2 years and focusing almost exclusively on central bank digital currencies, CBDC. And I'm co-leading Accenture CBDC campaign globally, and I'm closely involved in CBDC engagements, including with the central banks of Sweden and France. Now, the impact of CBDC is expected to be greatest on international payments. And the topic of the panel, the digitalization of international finance and the future of the international monetary system, is therefore most timely amid the recent flurry of developments around CBDC. Now, the international monetary system is about supporting international payments and offering adequate liquidity to allow orderly balance of payment adjustments. Central banks are its main actors, but central bank money in electronic form today cannot be used to conduct international payments. The Federal Reserve dollars always remain at the Fed, and the ECB's euros always remain at the national central banks of the euro system. While it is the preferred medium, in particular to settle large value payments transactions, it can only be held by resident financial institutions. This implies that the advantages that exist for conducting payments in a domestic settings do not apply in an international setting. Now, the ECB, in its recent report about a digital euro, has now advanced a radical proposal, giving considerations that a future digital euro may be held by non-resident entities as well. This offers a significant change that may materially offer new avenues to conduct international payments. And I hope, of course, it'll be subject of our discussion later on. And it's really, for me, about changing the very geography of central bank money. Now, the CBDC debate has changed significantly. Recent comments suggest that CBDC has now entered, I think, from the fringes to the core of the international policy agenda, mostly in order to address payments problems, mostly in the international domain. Another issue has also emerged, I also think, with the ECB report, namely, can CBDC serve to make national currencies more attractive as international currencies? Certainly also an issue that has been advanced by the People's Bank of China. Now, CBDC is set to come. It has become part of a wider aim towards greater diversification in finance by actors, currency, mediums, and geography. It lends confidence to token-based financial market infrastructures and issuers of token-based assets. It will likely very much change finance. Now, we have an outstanding panel to discuss the relationship between CBDC and the international monetary system. Harold James is professor of history at Princeton University and one of the foremost experts on European monetary history, and who has recently just published a book I saw about the history of the Bank of England. Rod Garratt is professor and chair in economics at the University of California at Santa Barbara, and who has closely been involved in digital currency works at the Federal Reserve Bank of New York and the Bank of Canada on Project Jasper, a project where Accenture also has been closely involved. Livio Stracca is Deputy Director General, International and European Relations at the ECB. He published on CBDC in particular regarding its possible role in international transactions. Jean-Pierre Landau is Associated Professor at Sciences Po and former Deputy Governor of the Central Bank of France and a leading expert on international monetary affairs. He co-authored with Howard James a book on the euro and the battle of ideas. And Leanne Zeng, she's Vice President Global Affairs of Thousand Cities Strategic Algorithm Cloud Technology. TCSA is offering solutions to leverage the information content of currency movements as key input for economic analysis. Now, the idea of the panel is a moderated Q&A. I will ask questions. Please do ask the other panelists as well as you would like. I will kick off with a question to Harold about the international monetary system. This is a system that has been criticized for decades for having major problems and deficiencies. Harold, could you give us a sense? What are the problems that we are trying to fix when it comes to the international monetary system? It's sort of as a starting point for the discussion today. Harold.
Well, thank you, Ousmene. It's a great pleasure being with you here and this important discussion, because I think we really are indeed at a radical moment when the technology is changing and pushing into a completely new area of monetary history. When you ask about the international monetary system, that's obviously a big issue, and it's, I think, good to start with a long-term perspective. Fundamentally, this was a system that was designed, the institutions were designed in 1944 and 1945 at the end of the Second World War. There have been constant calls to reinvent Bretton Woods. I mean, we're obviously here in this meeting that Mark has convened, and a little bit of history that dates me. I remember when Mark started this initiative in the 1990s, reinventing Bretton Woods, but there's never been a moment like Bretton Woods again. Obviously, Bretton Woods was at a moment when the United States was the massively dominant economic power, over 50% of world GDP. Round about now, it's very, very substantially reduced. It's under a quarter of GDP now. The prognosis is by 2025 it will have shrunk to about 15% of GDP. In that circumstance, it's obvious that there will be other currencies, and for funding purposes, you've talked about the euro, the yen, the renminbi, and there's a very ambitious project to internationalize the renminbi. But I think also part of the drive here is coming because the technology is changing. In the past, money was associated with state promises, and money was credible in the 20th century because states could tax. And we're thinking of a new kind of money issued by private actors that's competitive with state money. And that's the area that I think you're thinking about competition. And so I think two issues. One, the diversification away from the United States dollar as the center of the payment system. And two, the fact that there are private alternatives that will become more and more important.
Excellent. Thank you very much. A great start. Rob, would you like to add or maybe give an angle? What is it really that CBDC would be making different that could address some of the problems that seem to be sort of undermining a well-functioning international monetary system? What is it CBDC is adding to what currency today cannot do?
Well, I guess the way I would think about it is that, generally speaking, when we think about improving the international monetary system, we think in terms of whether or not we should have this sort of coordinated, unified approach as existed with Bretton Woods, or whether or not we should be thinking in terms of the ability of individual countries to form bilateral agreements or even multilateral agreements among groups. And I think history has shown in some sense that, the experience since Bretton Woods is not as good as it was during on some dimensions. I mean, at least that was reported in a recent Bank of England study. And so I think one way to think about it is whether or not CBDCs could in some sense facilitate or improve the ability to have a unified, coordinated approach. And it's interesting. I think in your introduction, you mentioned, the idea, can a country, by issuing a CBDC, make its currency more attractive? Well, they can't all be more attractive, right? So the idea, I think, is whether or not, individual countries, by introducing CBDC, can make their dollar more prominent, or their currency more prominent, I should say, and whether or not that can help towards a better approach to the monetary system.
Thank you. Any other comments on this? What is it that the system needs that CBDC may offer? In my work, it's a lot about establishing much more direct payments relationships. The idea that you can send CBDC like sending an email, allowing principal-for-principal transactions, PVP transactions, across space and time. That is where we see the efficiency gains that could help make the system work more smoothly. But it is obviously work in progress. Livio, I'd like to come to you on the ECB report on the digital euro. I thought this report was really amazing. I mean, in particular, when it comes to this idea that, well, foreigners should as well be able to hold a digital euro. Could you comment on the report and what do you think could that mean for next steps for the euro system?
Thanks, Ousmene. So on your previous question, I want to say something. We all remember the speech of Mark Carney in Jackson Hole last year, where he said, the world would need a synthetic new currency which will replace the dollar and so on. So the question for the others in the panel is, because Carney did not really specify how this should be done, whether anybody has a better idea or a more concrete idea of how this should be done, and because it's connected also to CBDC, so could this kind of new currency be kind of digital? And so I just don't know what, if there is any concrete idea on the side of the Bank of England or anybody to make this concrete. On the report on the euro. So one thing to clarify at the beginning is that the international of the euro is certainly not the primary goal for establishing a digital euro. So as you probably know, DCB sees the international of the euro as a result of good policies and not as a name in itself. So it's a bit a cherry on the cake. It's not something that we need necessarily to push actively. But from the point of view of the international use, there are a lot of questions of design of the CBDC that needs to be discussed. The foreign use entails a number of different aspects. Of course, you can almost never prevent a use of a digital currency in a secondary market. Unless you really have to go very, very, very hard on geolocation or. So my guessing that it's going to be very hard to completely prevent international use or foreign use of something which is as immaterial as a digital. And we already don't succeed with banknotes. And after all, a digital euro is an evolution of a banknote. Certainly, what one can think is that there could be restrictions in terms of official holdings to euro area counterpart, in the same, as you said, in the same way that we have for financial institutions that have to be resident in the euro area, or in the case of the US, they have to be resident in the US and so forth. But I don't think that any design would completely prevent some degree of international use. So I would stop here for a moment, but I can elaborate if you want.
Okay, very good. Well, I probably would like to invite you to elaborate later on, because what I thought was striking is how explicit the report pointed to the possibility of foreigners to hold the digital euro, and also a question to Jean-Pierre. The report very clearly states that the CBDC digital euro, could help in the economic autonomy of the euro system by making it more attractive as an international currency. I think this is new. I thought the ECB had rather a neutral tone before. Now it seems to proactively endorsing the idea that the euro should play a greater role internationally. Jean-Pierre, how would that work? Why is that an issue? And it also relates to Howard's point earlier on that we could see greater competition, mostly for the dollar, if indeed the euro were to become more important as an international currency.
Thank you, Ousmane. Maybe stepping back and making a sort of out-of-the-box remark. Why are we having this discussion now and not 2 years ago? 2 years ago, it was an absolute non-topic, right? Sure. There were only a few strange people like me who were thinking about it, and now it's all over. So how is it? What happened in 2 years? What happened in 2 years as a name? It's called Libra. What happened in the name? It's called Libra, and Libra has shown that you can be digital, you can be cross-border, and you can have your own unit of account. And that, of course, the idea that the private currency cross-border with its own unit of account could emerge and it's technically feasible on a network with 2 billion people, that has bound to be a shock for most issuer of official currencies. That's what happened. So my second point is that, of course, there may be international aspect to the issuance of CBDC, but it's mainly a domestic move. It's mainly a way to ensure that people still use the public currency, the public money, in a period of digital payments. So people want digital payments. They're very happy to have money on their mobile, to be able to send it, as you said, Ousmane, with like an email, no distance, no delay, no cost, just like cash, right? Except there's no distance. And then, of course, if the private sector offers that, then if the public sector does not offer the same medium of exchange, the public sector will disappear as an entity which issues medium of exchange. And you and I, we will have Libras in our wallet, just like the Chinese today. They have a WeChat and unfinancial tokens in their wallets, right? And so the central banks and the government will disappear, at least visibly, from day-to-day payment. And apparently, and I think they're right, that's a perspective that central bank didn't want to contemplate. So it's no coincidence that one of the central bank most advanced in actually experimenting CBDC is the People's Bank of China, because that's where the digital payments from mobile have most developed. And you can see, including in recent events, that the prospect of having a giant emerging in payments and dominating an ecosystem of payments of 700 million people, in addition issuing an IPO of $37 billion, clearly unsettled, and for good reason, in my view, the Chinese authority. So before we talk about the international thing, I think the reason why all central banks now are very interested in the CBDC is that they want to give people access to their own money in digital form. That's the main motive. And in my view, it's a very good motive. I pleaded for that 2 years ago. So the international aspect, it may be, as Livio has said, the cherry on the cake, but it's not the main motive. Now, of course, when you have big central banks from large countries starting to changing the form of money, you have to wonder what kind of consequences it will have and whether it will have a consequence on the competition between currencies. My own view is that those who are most potentially destabilized by the appearance of digital currencies as international means of payment are a class of emerging economies who are large enough to cherish their monetary autonomy and refuse dollarization, even digital dollarization, and small enough not to be able to impose their own currency in international digital payment. So it's no surprise to see medium-sized or large emerging economies in Asia, in Latin America, being or Canada, being very active in promoting this kind of payment. I will use a term which is maybe a little bit excessive, but I would not support I would not agree fully with the idea that the move to a digital currency is an aggressive move. It's actually much more a defensive move to protect your own public money as a medium of exchange.
Very good. Thank you very much. Leanne, China, of course, was mentioned. China is one of the leading countries. It has introduced in select cities DCEP. My understanding has always been the underlying motivation is part of making the renminbi more interesting as an international currency as part of this renminbi internationalization that the PBOC has embarked upon. Could you give us a bit of an overview? Where do you see DCEP fitting in, and what has it done really to making payments in China?
Sure, happy to share. Everyone knows that actually China started piloting the idea or exploring the idea of digital currency not in the last 2 years. I think globally speaking, it's Libra that woke us up, but China actually started back to 2014 and 15, so 5 to 6 years time already. So with current domestic trial run in China in 4 cities, China's central bank is now, we can say, at the vanguard of the sovereign digital currency. So if the Chinese government is able to popularize the use of DCEP, what kind of motivation it actually has behind all this move? So I think there are significant economic and political benefits even at home in China. DCEP is also considered to be very helpful for boosting the RMB internationalization, especially in the Belt and Road area and regions, which is the key long-term goal of the Chinese leaders. So I would put like this, domestically speaking, Beijing's plan to have DCEP, the CBDC plus electronic payment, which is called DCEP in China, is to eventually first replace a portion of significant cash that is in circulation, because that will reduce also, the cost related to securing and maintaining the physical cash in circulation, which will even reduce, let's say, up to 0.5% of China's GDP. Secondly, the DCEP is expected to operate without internet and without bank account. Of course, this carries large implication for financial inclusion, especially for women, for poor people in a very remote area in China where you don't have internet or Wi-Fi or 5G. So that's also for greater financial inclusion and economic development and growth opportunities in China, big territory. And thirdly, a digital RMB will also enhance the government's, let's say, capacity to control and monitor. That is also very important for surveillance purposes. So when individuals, they use DCEP, actually there are real-time data that can be made available to the authority. So basically they could make use of this data for combat illicit activities, corruption, even link this behavior activities of consumers with the China's nationwide credit bureau system that will have credit scoring after all these behaviors. Of course, there's a lot of concerns over data privacy. I think all the scholars, practitioners will probably discuss over on the international arena, but in China, that is the case. So they can make use of big data analytics of all these activities, which we always see pros and cons of like two sides of a coin, right? So that's the third domestic motivation, I think. Moreover, data gleaned from this DCEP can also allow policymakers to make more nimble and customized monetary policy. Even they could designate, specific use of the DCEP. For example, if the government is going to, let's say, issue economic stimulus package, let's say payment of $200 or 200 RMB to each individual, they could even earmark the money to be used for purchase of daily necessities of food or medical supplies in the case of a pandemic, right? So that's another reason. Let's talk about internationally. Beyond the Chinese borders, DCEP can help facilitate, of course, the internationalization of RMB. We all know that in 2015, China already launched its own CIPS, cross-border international payment system. So if in the space of digital money, China is able to successfully install such a system, it's an architecture that centers around digital money, then basically it can transfer the technology and then cooperate with other countries and to have a series of digital currencies that work with each other, what we call interoperability of the DCEP, so that China can do many things around it. For example, providing even China's financial aids to other countries in the form of digital money, or even boost cross-border trades, as China is already pushing the RMB trading directly with Turkey and Pakistan. But that's the physical cash, I mean. But in the future, it's possible that they can also do this for the countries, I think, the Road and Belt Initiative countries. So that's with the international side. But while it could do it, there are still much hinges on the China's financial policies, especially China's very strict control of capital flows and renminbi exchange rates. This, on one hand, of course, will safeguard China from any external global financial volatility, but on the other hand, it's considered to be reducing the attractiveness of China's DCEP as a means of exchange and store value. So that's basically a very long story here to be put in a nutshell. Hope you enjoy it.
Very good. No, thank you very much. Reactions. I mean, China clearly is one of the leaders. Sweden also, in Sweden, the motivation has been, as Jean-Pierre indicated, the decline of cash. Cash has almost disappeared. You'll find many young Swedes who've never seen a banknote. It's quite incredible. So the central bank stepped in and said, look, we still want to offer a central bank money as medium of exchange to individuals. But the case could be mixed. I was surprised, Jean-Pierre, when you said this is the key motivation. You could argue there are so many payment alternatives, digital ones. Why do we need central bank money to conduct small value transactions where really the special role of central bank money isn't really important? I would think it's in large value payments, central bank money matters, and hence I would think its impact would be greatest where that special role is being maximized. Okay, Harald, go first, please.
That's exactly right, Ousmene. I mean, in a way, that's what's so exciting about this, because this is overcoming a division that has just existed for millennia. So small people have one kind of money, and big scale wholesale operations, big merchants have another sort of money. So in the Middle Ages or the Renaissance, small people had silver coins or copper coins and never saw a gold coin, and the gold coins were used to denominate international transactions. This is exactly bringing it together, and I think you know, the importance of this is, and Leanne put that very nicely, I think, is in bringing money to people, a sense of power to people who've been cut out of the payment system. And that's a big part of the population. Even in the United States, we have a lot of people who don't have bank accounts, and they have to pay a lot for financial services, and they feel discriminated against. And so, you know, if you're thinking about ways of bringing society together, overcoming this division between big and small money seems to be absolutely essential, and it's a very, very long-standing division. So this is why I think this is such a radically interesting moment.
Excellent. Jean-Pierre, you had your hand up as well, and then Rod, please. Yeah.
I think what Harold just said is extremely important. No, I just wanted to say we use cash. We use an enormous amount. We still use cash for payments. So as individual, even for small payment, we use cash. And cash is public money. Cash is issued by the government. So the idea that central bank money is only for large payment today is not true. And Harold said it should not keep true when we move to digitalization. He's absolutely right. He's absolutely right. Behind all this, I think, Ousmene, if I may ask, the question of anonymity. One of the reasons we use cash, at least as an individual, because we appreciate to be able to make small payments without anybody knowing about it, right? Sometimes you don't want your wife to know that you're buying a packet of cigarettes, and maybe you don't want the government to know as well, right? So this is very important. This is very important in terms of freedom. So I don't know what the participants think about whether CBDC should be anonymous or not, and whether what kind of governance arrangement should be made if central banks decide that the government decides it should be anonymous, and to make them credible. make that credible.
Very interesting. I have brought, Rod, you had your hand up, but interestingly, the ECB report already said there can be no anonymity with CBDC, which is obviously a sensible reality check. But Rod, please go ahead.
Yeah, I guess I'd like to respond to a few things. I think, first of all, I'd like to say that I agree with Jean-Pierre that certainly the focus initially with CBDC has been on domestic applications, and the potential need for something like a CBDC differs greatly across countries. You know, CBDC has been used as a potential tool for financial inclusion in places like Ecuador and in places like Canada or Sweden, where you have extremely well-functioning commercial payment systems, you know, used by operated by the central banks in cooperation with the private banks. You know, the case for CBDC is different. The main case may relate to privacy, and I'll say something about that in a minute. But I think that, you know, Libra was a game changer in the sense that this made us think much more broadly about the fact that these central bank digital currencies can be international, have an international component, and be tools to promote a domestic currency nationally. And I think we are thinking about that seriously now. If you look at the FSB put out 3 reports this year on cross-border payments. And in the last report, Area E speaks very clearly that they are recommending that in thinking about CBDCs, that countries factor in an international dimension. And so they're thinking very clearly about the role of CBDCs in facilitating international transactions. So I do think the emphasis in some ways is shifting. Going back to the domestic case, I think some countries are finding that this is a technology that was well worth exploring and may be very useful, but in some cases, it's not so clear the demand is there. So, I mean, if I look at the case of Ecuador, for example, this was a very interesting experiment where the motive for introducing CBDC really came from the central bank side. It was the fact that Ecuador is dollarized and they had to deal with large amounts of US cash. They had to obtain it, they had to hold it, they had to distribute it. And getting people to hold electronic money in the form of cell phone money backed by US dollars, or at least US dollar assets on the central bank's books, was a way to reduce this dollar dependency. And it was fairly successful, but in the end, it wasn't so clear that there was high enough consumer demand, at least not high enough to counter the pushback by the commercial banks. There's even an experiment that occurred in Finland in the 1990s with this Avant smart card system, which was digital central bank money on stored value cards, and this allowed privacy. So again, and there's a difference between privacy and anonymity, right? So you know, people would have to register. The government might have to know who holds these cards, but privacy is the ability to transact without the other person engaged in the transaction knowing who you are. And so this system allowed that. But again, in this case, ultimately people just didn't prefer it to the well-functioning existing system. So I think the case for domestic CBDC is an interesting one. It varies broadly across countries. I think in places like Canada and Sweden, I think privacy is a very good reason. In fact, I do a lot of work on explaining how there's a privacy externality that suggests that central banks should introduce CBDC. But I think we really should think seriously about the case moving forward about the international dimension to central bank digital currency. Thank you.
Thank you very much, Rod. And I'd like to go back to the international dimension, given that this is really the focus of the panel here. Livio, if you think about the international dimension, I know that the report was mostly about a retail digital euro, but it is sort of interesting, the combination of emphasizing how a digital euro could be held by non-residents and emphasizing how it could add to making Europe economically more autonomous. Could you comment on what is the strategy here? Is it from the dollar?
So no, that's for the question. So I agree with Jean-Pierre and the others that the emphasis in general CBDCs is on retail. I don't think that it's necessarily limited to retail. So I agree also with you that it could also for larger value. I mean, nothing prevents it being used for larger values, but I guess the main emphasis is retail payments, I would say. So in terms of, I mean, I also fully agree that the Libra was a key factor in spurring demand. And even the BIS, I think, had a very critical report on digital currencies 2 or 3 years ago, and now there is a flourishing of work by BIS on digital currencies. So it's almost a miracle. So I guess, I mean, in terms of competition with Libra or similar initiatives, is really a trade-off between, on the one hand, risk. I mean, Libra is not completely risk-free. It can be subject to runs. So only central bank money is completely risk-free. But on the other hand, the big question, this comes back to what Rod said. It's also a question of demand, and it depends a lot on interface with the client. So it needs to build an interface. If you can receive your Libra on WhatsApp, while you need to do something very complicated and old-fashioned to access your digital euro, so I guess who wins the competition. So that's, I mean, the interface with the client is very, very important, and it's not an area where central banks have an edge, obviously. But coming back to the international use, I personally, and here I'm expressing my personal view and not DCB official view. My personal view is that a digital euro would not necessarily be used for payments in countries where the euro is anyway not used already. So I don't expect the digital euro to circulate in Arizona or in Alaska but of course, I mean, there is a strong regional dimension in the international of the euros, and I could imagine that notably in Africa, a digital euro could be used for payments on mobile phones or in other ways, especially for the unbanked. So I can easily imagine that in the neighborhood of Europe, a digital euro would kind of come up and be in demand. But in terms of allowing foreign use, there is a lot of discussion, but I can assure you there is no consensus, even internal and external, how it should be done. So there are several design options that can be tried or conceived. And as I said, none of these design options, in my view, completely prevents the foreign use. So the question is more how difficult you make to allow to have a foreign use or not. And it's also very much, by the way, related to privacy, because if you need to trace the geographical location of each payment, you also need to reduce privacy. And so this trade-off between privacy and foreign use is also there. It is part of the same trade-off that you have between preventing money laundering and privacy. Of course, if you want to prevent money laundering, you probably don't want the digital currency to circulate in countries outside maybe Europe where money laundering is done. But at the same time, you need to reduce privacy. So and then the concerns on the other hand on privacy come into play. So it's a situation full of trade-offs and needs to be studied very carefully. And for that reason, we have started a public consultation until January, which and we try to gather many different perspectives on these issues, which are complex and full of trade-offs.
No, I appreciate. I can still obviously this is about international payments, and in many countries domestic payments work pretty well, and you know, you can conduct already today digital payments. You don't need a CBDC to do that, certainly not in a domestic context. For large value payment systems, they work pretty well as well. So again, but it's the new functionality that CBDC provides, being able to make you know, these so-called atomic transactions, payments versus payments transactions. The native capability of tokens allows us to do things account-based money simply cannot do, and that seems to matter mostly in international payments, because you know, this is where the correspondent banking model comes in. And the simple fact is we cannot use central bank money in international transactions. But you do not seem too interested by that fact. Leanne, you mentioned the BRI, the Belt and Road Initiative, and how China potentially could build a payments corridor, a digital payments corridor along the physical dimension of the Belt and Road Initiative. And that clearly has a strong, very strong international payment integrations component in it. Could you comment on that? How do you see this potentially being developed?
Yeah, sure. Even though I'm not from AIIB or the Chinese authorities, but as just as a person with years of working experience in the area of international development finance, I would comment that China is doing this Belt and Road Initiative, and also, setting up the AIIB. Actually, it's for several economic concerns and political concerns of the region. So I think on one hand, China wants to export its technology to other countries. It also wants to help other countries to improve their infrastructure, especially the information and the digital infrastructure, as China is being very advancing in this area, not only in terms of innovating financial services, but also for the infrastructure. I think just now we have covered many topics about legislative, regulatory framework, culture, mentality, whether people want to use cash or not cash, and all these privacy issues. But I think in China, because we piloted and it worked, and we have got several internet giants, Ali and WeChat, they have been doing very well, very successfully in this area. Therefore, we want to replicate the success also to emerging economies and transition countries. Well, if you help them with the physical infrastructure, help them with the digital infrastructure, you help them with financial aids and give them trainings, probably it will help China to also export our know-how, our goods, and also to achieve, or let's say, a common growth or common sustainable, more prosperous world. So I wouldn't say China is only thinking about itself. I think it's trying to replicate its success in other regions where people's culture mentality are similar, where people want to copy or probably learn and upgrade their system. So China is actually doing a lot of things around this. So digital currency or CBDC, or building a network of neighboring countries that all, on one hand, China can export technology in terms of how to design the digital currency to reach different purposes, because the purpose, the motivation of a CBDC actually influence the design and the policy behind a CBDC. So China can export technology in this hand. On the other hand, is to really see how to convert the money, how to make it interoperable with other countries. But I think there's a basket, or to say a series of issues to be considered and factors to be considered before China is able to do that. And at first, China should be able to have its own architecture centering around digital currency before it can cooperate with other countries in forming alliance or to work with other countries in terms of the digital currency cooperation. Yeah, for boosting trade and also for providing financial aids.
And that I'd like to come back again upon that Howard mentioned. The introduction of the gold standard was very much motivated by the idea to conduct international payments. So the switching from silver to gold, in large part, a new medium that could facilitate trade to the extent that silver could not. Is CBDC precisely that new medium that can achieve what the gold standard did at the time, namely making international payments much simpler? And in that sense, we have another sort of gold standard moment with CBDC. Or would that be going too far? Howard, what do you say?
Well, no, I think that's exactly right. And, again, you shouldn't think in this world, which is very, very extensively globalized, despite all the pushback against globalization, but you shouldn't think that globalization and internationalization is just for the big payments. It's also about the small payments, because if you think of the story of remittances, remittances are really critical for many poor economies, but also obviously they're critical for the people who do them, for the people who are working in rich countries and trying to send money somewhere else, and so having some form that this is possible, but also I think we also get back to the point about privacy, because there is always, when you have any kind of international transaction like this, there's worry about money laundering, stacking up lots of small transactions to amount to a very large transaction. There's worry about terrorism. Those are all realistic things, and I think when you're thinking about the way in which the
non-private digital money works, you can think of all kinds of benefits that will come about with that as well. That you know, if you go back to Jean-Pierre's example of secretly buying cigarettes or drugs or something like this, that affects your health. And so it should affect your insurance costs. And so if the insurance firm really knows about this, you know, your wife might not know about this, but the insurance firm should know about it in order to be able to price your insurance properly. So it's got a potential to offer all kinds of benefits, international, but also in terms of functioning in a domestic setting.
Yeah, Jean-Pierre, please.
Maybe two remarks. The first one is that this may go down in history, what happened up to now, not what's going to happen now, as a test case on the effect of competition and innovation, right? We had those kind of strange exotic cryptocurrencies like Bitcoin and Ripple emerging. We had Libra announcing something. At the moment, they haven't done anything. And then you have the whole financial community rushing to improve cross-border retail payments. And the cost is diminishing, the easiness. So this is, in my view, an absolute test case on the effect of competition and innovation, right? So all the big institutions have announced initiative, improvements. It's extraordinary. It's extraordinary, and the banks are themselves moving very, very fast. So whether it's public or private at this stage, it may be of a second order of magnitude. People who send small amounts of money on long distance are going to benefit heavily from what's going on. And I think that is extremely, extremely important. The second on privacy, which has been mentioned by Harold, I think it's a much broader issue than for money. Money is an important part of it, right? But of course, a lot of people would like to have very detailed information about my medical condition. And actually, it can be argued, it's in the public good that my medical conditions, even anonymized, be known by everybody, because it helps research, it helps data, it helps. So this is a big, big problem. And I remember that, and it's not a matter for central banks to decide. That's my point here. I remember talking about that with a former colleague who has a very high top job in a big central bank, let me put it that way. And he told me, don't quote me, but I don't think central bankers should be deciding on privacy. The question of our privacy regarding to money, it is not in the mandate of central bank. It's not part of their stabilization function. I think the society and government should decide on that. And I think it's a very, very critical issue. It's part of a broader thing. I think Harold gave the big picture, but we should always be concerned about it. It's much more important than the technicalities.
Very good. Comment on the privacy. It's interesting. We have done a project with the ECB about showing what sort of privacy can be afforded if you use a CBDC using a Corda, which is one of the prominent blockchains for CBDC. And you can of course make the parties anonymous, but of course all transactions can also be traced. But interestingly, in the case of Sweden, for example, if you look at the e-krona reports 1 and 2, there's not even mention of privacy. So it's also a cultural thing. You know, in some countries it may matter. In other countries it may simply not matter. Okay, yeah, Jean-Pierre, you want to return on that? Yeah, please.
It's cultural. That's very interesting, because if it's cultural, it means the cross-border issues are going to be very difficult to solve.
True, indeed. Livio, would you like? Oh, Rod, please go ahead. Yeah.
Yeah, I mean, if we want to continue on the privacy discussion, I mean, I think that, I mean, one interesting thing is that, you know, the only way to pay right now that is private is provided by the central bank, but that's, you know, that wasn't an intentional decision. That's just how, you know, paper currency evolved. And I think there is, though, an argument that, you know, the central bank is the right institution to provide privacy. And so, you know, in fact, you know, Christine Lagarde, said in a famous speech that central banks can provide one thing that the commercial sector cannot, and that's privacy and payments. And what her point was that central banks don't have a profit motive to do anything with your data. So if you think about the central bank as essentially, I'm coming from the U.S. where the central bank is essentially an agency of Congress. So the central bank works for the people. So the central bank having access to your data is not necessarily a bad thing, and it's not the same thing as the government having the data. And moreover, whenever, as an economist, whenever I think of whether or not an agency like a government agency like a central bank should be involved in something, I have to ask whether or not there's any type of a market failure. And I think in this case there is, because one of the problems with privacy is that there's this externality that I mentioned earlier. And so, if I don't protect my privacy, that can hurt you. And even if I do protect my privacy, that's not necessarily going to save me, because you might not be. And there are many aspects about me that are similar to you. We're all economists on this panel. We have lots of things in common, and observable characteristics about you can be used through big data analytics to make inferences about me. So there's this sort of potential market failure that I'm not so sure the private sector has an incentive to correct, but central banks, through issuing some form of privacy, keeping other social objectives in mind, but through issuing some form of currency that provides privacy, can correct.
Thank you.
Can I add? Yeah. Okay, so first of all, even if I personally value privacy a lot, I know a couple of papers which show that actually the people's actual willingness to pay for privacy is pretty low. So we have to be aware that that in the end, okay, even if we like it, the question is, how much are we, ready to pay a sacrifice for privacy? As a general remark. Also, an important point to remember that at least for the ECB, but probably for most central banks, the CBDC would only add or complement cash. It would not replace cash. So in a sense, the central bank would claim to be neutral vis-a-vis privacy, because it could claim I issue an anonymous liability and a non-anonymous one. So, and then the clients choose which medium to use. So in that sense, we can still claim that we are neutral towards, because I agree that it's not up to central banks to decide what is the right level of privacy, obviously, unless it impinges on their functions. But many of them don't have, for example, a strong role in anti-money laundering. So they don't have a direct interest in privacy from that point of view. But I would say if cash remains, a liability of central bank is still used, and I think it will remain. In the sense there is a kind of neutrality.
Can I interject on that, Ousmene?
Yeah, I didn't find my unmute. Yes, please, Jean-Pierre.
Maybe 2 remarks. This is very interesting. Papers show that people are not prepared to pay for privacy, but that's because they are in a totally asymmetric information situation. They don't know how much their privacy is worth. So when Google asks me to consent to my privacy, I have no idea how much money Google is going to make out of this information. So I very much agree with, there are a lot of externalities there that Google will not internalize. And as an individual, I'm saying Google, anyone, as an individual, I am not in a position to bargain my privacy because of huge information asymmetry. So I wouldn't value these papers too much from that perspective. I agree with central bank having an incentive. They are defenders of public good, so they won't sell your data. I think it's an extremely good point. And then, during the last decade, we heard a lot of statements very optimistic about the survival of cash. What we see is actually a series of discontinuity in the use of cash in payments, which is falling very, very quickly. And it's not linear. You have a new generation of payment terminals which come and it falls. And one of the biggest trauma I had in this, when I was buying a packet of chips in Newark Airport, and the lady didn't want cash, in New York, right in the middle. So it's falling very fast. So I would not be sure, I would not bet the house that in 5-10 years, cash will still be there as a medium of exchange. It might be there as a store of value, but that's exactly where we don't want to protect anonymity as a store of value. We want to protect its anonymity for medium of exchange up to an amount. We don't want to protect its anonymity as a big store of value. So I would not be as optimistic as that, as the fact that that cash will still be there as a major medium of exchange in the next in the next decade. And in my view, that's the reason why central banks are taking those precautions. They are preparing for a sudden discontinuous break in the trend in the use of cash, and they want to be ready to provide electronic cash to the people. Sorry, I've been too long.
No, not at all. I mean, there's one interesting sort of fact that, U.S. banknotes, about 60% of them are estimated circulating abroad outside the United States. Now, 60% is about 1% of world GDP in U.S. banknotes circulating outside the United States. I'd like to, the privacy, of course, is something that in the international context almost doesn't exist, because in the international setting, all transactions are electronic, except obviously your odd bag of cash that you carry abroad. But it is, so there cannot be privacy in international transactions, really, if electronic forms of money are being used. But certainly there are ways to sort of anonymize the transacting parties to some extent. In China, of course, it looks like DCEP is also used as a source of information. In fact, and your company, actually, TCSA, is working on solutions to actually extract information from currency movements. Could you maybe elaborate a little bit on that? And what do you think that means in terms of the information content that is embedded in currencies and we actually do not use very much at the moment?
Yeah, sure. Thank you very much for the question. Actually, I have already mentioned several points earlier when I was answering the question about Belt and Road, because my company, basically, we consult central banks and government in the use of data, not only for collecting of data, because a lot of tech firms like big tech firms, they already collect data, but they don't know how to use the data. And we want to make use of the data and to support the government with decision making, what we call data analytics supported or data analytics driven policy making for monetary policy making and also for macroeconomic policy making. Take China as an example, because we already have the digital infrastructure or the information infrastructure in place. We have the people's mentality and culture adapting to this type of, let's say, disclosing one's identity, but for the exchange of ease of payment, ease of convenience of living. So they're ready to scan the QR code and provide, the coordinates, the position, the location, and the content of the service, the commodity itself. So we think that for macroeconomic policy making, we have got several international standards ranging from ASNA to GFS to MFS, MCG to BOP. But we do see some silos. So what we do is actually to decompose the current system and try to restructure them into different dimensions so that government can take this monetary transaction granular data as a support, what we call a algorithm unit, so that we can aggregate all this data into a mega overarching structure so that government will be able to access different aspects, from the budgeting, from the fiscal aspects, to monetary, to financial stability, to the nationwide macroeconomic data, let's say, policy making. We're trying to pilot this in other countries, and we're talking also to similar economies as China from the transition countries and emerging economies, and try to have them understand our value proposition. And probably we will start from those economies due to data concerns and legal and regulatory concerns, as we have already discussed. Yeah.
Very good.
Thank you for the question. Yeah.
Unfortunately, we are almost on the hour. Look, I thought it really has been a fascinating discussion. Mark, we are. Would you like to, or Henning actually, hello, make some concluding remarks at this point? We only have 2 minutes left, unfortunately.
Yes, Ousmene, thank you. Yes, in fact, sorry, we have to rush a little as we have another session coming in 5 minutes. I think, let me thank all of you. Ousmene, thanks for sharing this session. Of course, we will continue this discussions about the digitalization of international finance. It's a big topic that, of course, we are very keen to follow.